Now we're recording. And I'm not
Okay.
touching anything this time, so go ahead.
All right. Well, this is the week 3. Week 4 is in the group for you for your what you need to get done by next weekend. I believe it's the 9th. We'll do that. Two things I want to ask before we get started here. Does everyone want to keep doing weekly, or does everyone want to start doing every other week? It doesn't bother me. Doesn't matter to me, but just want to make sure there's some questions because I don't really know exactly what to present each week. Other than here's some charts I marked up, and then take questions. So I don't want to reteach ICT's stuff because that's why we're watching the videos. So
Yeah,
kind of need some feedback from everybody.
I was expecting more questions because I know when I went through it the first few times, I had a lot of little questions about things, terminology, and just some of the stuff that he would point out. Now that I went back through one of the videos yesterday, I picked up a lot of the stuff that I missed, but I recognized some of the places where I was wanting to know something just to clear up something. So that's kind of what I was expecting we'd be able to help benefit people with here. As for myself, I'm kind of for the weekly just because I don't want to do it for 20 weeks.
Oh,
I'd
I wasn't talking about 20 weeks. Let me clarify that. I'm saying is stick to the weekly. I have
Oh,
three or four videos to do, but only do the live stream every other week.
oh, okay. Well,
Just
yeah.
because depends on how many questions. I still want to do weekly on the thing because I want to get done in 10 weeks. I need to
Right,
get
right, right.
done by
Okay, yeah, yeah, yeah. That's
Thanksgiving because,
right.
um, but it does matter. Put a vote in the group
Okay, yeah,
and
that
see
works.
what everyone says.
Okay,
Do it that way.
yeah, that would work.
Weekly. All right. And so I have some charts marked up, and then put your questions in the chat, and then we'll go through them after I show you these charts. And if there's a question on a specific chart, I'll ask before I move on. Clear it up. So I'm sharing a screen here. So this is AM Silver Bullet. I guess everyone should know I trade the Silver Bullet sessions mostly. I do trade the DR in between them, but this follows the rules, and you have your buy side liquidity taken. So that's step 1. Step 2 is you need a market structure shift with displacement, which is these candles right here. So that was market structure shift. You have displacement. You also have a fair value gap right here. It's not marked on the thing. Let me zoom in a little bit to make sure everyone can see this.
Yeah, that's a good idea
Oh,
for the video to zoom in on it.
can you see that better?
Yeah, a lot better.
Okay, so right. Oh, come on. Where's my little pointer? Not this stupid hand. Anyway, right here is the fair value gap. It never gets traded in. You see that, right?
Yeah.
Well, you can also get in on a breaker block. That's another PD array. We don't have to necessarily just look for fair value gaps. We can use a breaker block. Well, what's a breaker block? You have up, down, higher high takes out this high right here. So this right here, this candle right here, is your breaker block. Move that over. Once it trades back through it, that becomes a breaker. We're waiting for price to come back up to it. And this candle started here and it came right back up. And that's why the entry is right there to go
Oh,
short
good stuff, man. I miss those a
there.
lot.
So I have been on the videos I've been saying I've been marking out the breaker blocks a lot more because I always miss this trade. I would have never got into this trade right here because never hit. I mean, this stayed open, this fair value gap here stayed open, but I never got into this trade.
Right.
But high, low, higher high, breaks this high, then when it trades through it, they want to mitigate their position. And that's why when it comes up, you can take that trade off this breaker block and down.
Right.
And then we're targeting the sell side liquidity. Yeah.
Can we use the breaker block multiple times, or is it just for a single use?
You can use it multiple times. If it comes back up, you can take another trade off it. If it came back up, you can use it as many times as you want. There's
Is it
just
the same thing with FVGs as well? Like, can you use it multiple times?
yeah. If you look, let's go over here for a second. It's not marked up. Just follow my. I think this is a hand for everybody.
Yeah.
Okay. This right here takes out liquidity right there, right?
Yeah, yeah.
So that's step 1. We don't get a market structure shift, okay? You don't get one here because that would have been this high for this right here, okay? But let's just assume you have this fair value gap right here. Let's extend that over. It gets traded into once, twice, 3 times, 4 times, 5 times, 6 times before going higher to take out this high. So if you would have got traded this is before the range, the opening, the 9 a.m. opening range. This is probably your Judas swing before at 8:30. This is your fair value gap. Hitting off that new week opening gap right here. In the video, I believe I talk about this. I would have taken this trade because it keeps wicking off this new week opening gap, which is the purple dashed lines. It's just being respected. There's no candle close into the new week opening gap, so we're definitely going higher, and you could enter anywhere here, stop below this candle's low right here, and you would have taken up here for a trade. It would have been a clear, easy win trade. But just to feel you to answer your question, you like this fair value gap we were using it, you can trade multiple times. If it closes below it though, then it violates it. You don't want then you're looking for it to be a resistance at that point. So and these is all these are on my 1 minute chart. Right. So this are we good with this one?
Yeah, we are good with the FVGs one.
All right. So
just to reiterate, the breaker block is that high, and when that high is broken again, to take the liquidity, and then we have a market structure shift. And that becomes the breaker block, right?
Hold on, I had to grab something here. Let's see if I can move it over here. Hold on, give me just a second. Right cards. This one? Yeah. All right. Oh, it's like that, isn't it? Oh, it's nuts. All right, let's just move this whole thing over here. Can you see this over here?
Yes.
All right. So, breaker block. You have your high, a low. It's a swing low, and that swing low breaks this high, right? So it breaks that stuff, and then when it trades through it. When it trades back up to it, that's when is your breaker block. Your swing low is your breaker block entry. Like this whole thing right there. Market structure down. I mean, you can read this over here. That's what it's doing. Okay. So there's your breaker block. Here's an example of one here, where you have it's the high, the low, higher high, trades through it as it comes back in. As soon as it hits it, we're trading it. It can be used down.
I just put a link to a breaker block video in the chat.
Yes,
I watched it last night. It's pretty good. It's very clear, and it's got some good graphics on it you can save off. And it's funny, that's the guy I was talking about that bailed on his Discord, so I wouldn't go join it. But anyway, the videos are good.
Yeah, we're not bailing on any Discords. So, but okay, so that's that one. I'm going to go to the next one here. This is, I think, the PM session on Monday. The liquidity is taken right here. Then you have, consolidation here. Market structure shift. Why? Because these are relatively equal. I'll use that as a short-term high, but I'll use it as a market structure shift in this. You have your displacement that goes through it, right? Leaves a fair value gap, trades back into it, take your trade. I think it's 1 to 2. Could have gone for the new week opening gap, but I didn't. Kind of makes me mad. One thing like I said before, I wish I leave more runners on, but with Apex, I'm like trail too tight. So
yeah.
But just want to show you step 1, step 2, 3, 4 entries right here, 2 to 1, done. Right? Just not. Don't overcomplicate it.
Yeah, 2 to 1 is good money.
That's it. So,
and that's what's so great about this. I mean, this thing just repeats. As long as you're in a day with some kind of a move, you're going to have opportunities.
Yeah, you can see this every time frame. Now the silver bullet. There's 6 ways to trade the silver bullet. I only trade one of them, the 2022 mentorship in the silver bullet section. I'm starting to get more into the other 5 ways you can trade the silver bullet.
I don't even know if I know those.
Hours.
Oh, the other time frames?
Hold on. Yeah, hold on. I'll show that to you. Give me a second here.
I thought there were 3.
Gotta remember which I have. I made all those. Where is it at? This one. Oh, yeah. Here you go. Make this higher. So this is straight from the video of ICT's silver bullet video. I know we're off topic here, but this is what he says. He says you can trade from previous daily high or low is your drawn liquidity, like where you're targeting to. And all he's basically saying is find your draw, and then if there's a fair value gap to take to that range, and you have at least 5 handles of a target, you're only shooting for 5.
Right.
You can get in your trade. So his biggest thing is find the draw of liquidity. Well, here's previous daily high or low, previous session high or low, like his last one setup for life model, previous week high or low, return to the current or old new week opening gap, expansion away from the current old new week opening gap, and then either ICT OTE model, which we get on Friday, and or the confluence of the 22 mentorship model, which is the one I trade. So of the 7 models, I'm sorry, I trade the 7th one mostly.
Okay.
So
I guess when I've been going through and just sort of, like when I'm at work and I'm looking at London, if I don't get it in the first hour, I still have the charts open. I'm still looking. If that opportunity arises and I get that big move and the displacement and the fair value gap, I've just been taking it and treating it like the silver bullet. I mean, it does end up finding, that either the session high liquidity or daily high liquidity, but you're definitely not limited to those time frames. The 1 hour here and the 1 hour there. Excuse me.
This 2022 is not actually meant for only the silver bullet. I just trade it in that window because I like the model. Right, you take liquidity on a higher time frame. Why is this a 1 minute chart? Why is this a higher 1 minute? Why is this a higher time frame? Well, it's definitely a 5 minute. It's also a 15 minute. Yeah. It's also a 30 minute low. Because here's a 30 minutes right here. This gray. That's a 30 minute low. So it's a higher time frame liquidity grab right here when you go to that one, right?
Yes.
So it took liquidity here. You have your market structure shift. You have displacement, fair value gap. Take your trade.
Yeah. See trade, take trade.
Right. If you did your fib from here to here, that's definitely in discount.
Yeah.
Mm-hmm.
So, that's another one. This one is London silver bullet. This is on, I don't remember what day this is on. I think it's Wednesday. Liquidity is taken. You have a short-term high here. It's not a market structure shift. For me, it would have been up here. So short-term high. This is a mark model. I call this the mark model because this is one I wouldn't have traded, but I did. I marked it up because I'm like, I see this, and you have to hit it.
Are we ever going to get it clear whether it's a break of structure or a market structure shift? At least the way I mark my chart, I'd like to have the right information on there so that if anybody's watching the video or whatever, they're like, oh no, he's an idiot. I mean,
well,
you're right.
Yeah,
the one you're pointing to up above is more of a market structure shift, and this looks like a break of structure here, but ICT pointed to that exact same thing and called it a market structure shift.
Well, here's the thing on ICT. There's 3 different things that he calls a market structure shift. He calls it a market structure shift. He calls it a short-term high. He calls it a break of structure. I'm sorry, there's 4. And then he calls it a change of state of delivery.
Oh, okay.
So it's like, all I use what's the main swing point that created the low? For me, it's this. Right? Now, if it trades above this and gives me displacement, will I trade it? Yeah. To me, is it as high a probability as it traded over here? No. But does it still work? Yes.
You'll miss a lot of trades if you try.
Yep, I miss a lot of trades when you go off this one.
Yeah.
Right? I mean, if you waited for this, what'd you get? You got in right here.
You're lucky if you're even in discount still.
Yeah, you're not, because you're definitely in a premium at this point. So, but for this one, what I did was I was like, okay, but then you have a breaker block right here. Now, the breaker block example, you gotta really see this because I had a long discussion with someone that is one of ICT's really good students about this, about how this is a breaker block. I'm like, I don't see it, and here's how I'm gonna zoom in here. Okay, is that really big for you guys now?
That's perfect. Yeah.
This is perfect.
Okay. So follow my hand here, right? Low, high, lower low. Breaks, that purple box becomes breaker. Okay, so this one candle, it's an order block. Okay, it's an order block if it hits here and comes down 100%.
Okay, yeah.
It becomes a breaker when it goes through it. It breaks through it and trades back down to it.
Got it.
Okay.
So there's two ways to sort of frame that in your mind when you're looking at it. If you can see the order block, you can see the breaker block. It just has to trade.
And why is this an order block? Because it has a fair value gap right with it. Go short. Like this is a bearish order block, because this right here, it's not highlighted. My hand from here to here is a fair value gap.
Right.
And we're expecting price to come back up, hit the fair value gap or the order block, and come down. Right? That's a bearish breaker. I'm sorry, bearish order block.
Right. Yeah.
It becomes the breaker when it trades through it and back down to it.
Gotcha.
So that's why, I mean, I was like, I didn't even see that. I'm like, okay, now I understand. Like low, high, lower low, breaks through and back down. Yeah, it's kind of like it's very much like an inversion fair value gap, except it's inversion order block.
Right.
They have so many names, but that's the breaker, right? And so then you have, for all of this, we have sell side taken, we have a short-term high being taken, we have displacement. So we have this green is the fair value gap, followed with a breaker block, making this a unicorn setup, right?
Yep.
Don't have the unicorn on my chart. Damn it.
Get your little unicorn.
I like to have my little unicorn image on his chart. The unicorn image, I mean, that unicorn setup, take this every damn time you can trade it.
Yeah, I know.
Literally every time you see it, because 9 out of 10 plus times it will work.
Yeah.
I can go that far because I've back tested enough. It works all the time. You don't get it all the time, but when you do, take the damn trade.
Yeah, that's the one you want to, add a little bit to maybe, and
and don't take partials because it's gonna run. Yes, unicorn is a fair value gap with an order block, or a fair value gap with a breaker block, fair value gap with a mitigation block. It can be, it's two PDRAs basically stacked.
Right.
Okay. You can even have, okay, let's throw this one out there for you. If this breaker block was a fair value gap, it would be an inversion fair value gap once it got traded through, right?
Mm-hmm.
So you could have an inversion plus a regular fair value gap, making this a unicorn setup to go long. Okay, so it's just two PDRAs.
So the inversion fair value gaps, is that a 2023 thing?
Yes.
Okay, and we're sure that that's highly accurate and all that. I mean,
I'm pretty positive that he covered it in 2023.
Okay.
I believe is when he came out with it or explained it.
Right.
But I will tell you that if I had a choice between taking a fair value gap or a inversion fair value gap, I'm taking the inversion every time over the fair value gap.
But the inversion, so even if there wasn't that other bearish or bullish fair value gap, you would have took that. Supposing that breaker block was an inversion fair value gap and there was no other fair value gap, you would take on just the inversion fair value gap?
Yep, 100%.
Okay, I got an indicator for that, and it's real easy for me to see them. I just haven't been, trading them or paying that much attention to them.
Here's why I don't know where I found this or heard this. I thought it was ICT, but maybe it was either Jade Cap or it was AK from Inner Circle Dragons or Lumi Traders. I don't know. One of those three. Through conversations in the groups, they're talking about inversion fair value gaps being more reliable than fair value gaps, in that they're like, you can basically see them as a market structure shift.
I guess that makes sense
when they happen.
In order for that to have happened, it had to get traded through. So that's a bullish move. So expecting the little retracement on a bullish move isn't ridiculous.
They're treating it kind of like a market structure shift. So like if this didn't work, they're treating that as a market structure shift.
Okay.
But it's I don't know. When you backtest and you start backtesting, you're going to see that there's a lot of times that fair value gaps work out, obviously. But then there's a lot of times that if you have a inversion with it, it'll trade to the inversion and bounce right back off.
Okay.
Like so for me, I'm always marking up the left to see where you're at, because like this right here, usually this fair value gap right here, it creates resistance going through it. And if you see it kind of stutters here, it goes a little bit through it, It doesn't just blow right through it. Okay, it's a little speed bump, right? So I'm always looking to see where is a potential speed bump for me.
And really, for
You
me,
know,
that fair value gap you just pointed out on the left,
this one,
that
yeah.
held the trade because my stop would have been up above that DOL.
All right, up here,
Yeah.
yeah.
So they'll get traded through sometimes, but it's still a strong indication that you've got something working there.
So if we have a crazy candle go through that top fair value gap, this one right here, if it goes right through it, we would expect it to treat it as support to go higher. Yes. Now, along with everything, you got to see where you're at in the range. You're at the top of the dealing range at this point. And so it's just a thing that we're watching to see how it's being respected. Would I take a trade off of it at this point right up here? No, because I'm way in premium at this point for my target. So you got it's one of those factors that as I'm playing in. So let's use this as an example down here. Zoom back in. Okay, let's say we took this trade right here. I'm marking out this fair value gap down as I'm taking this trade, and I'm seeing, does it get traded through? Does it keep getting respected? Obviously it's respected. A volume imbalance here. This candle's high, this candle's low, started higher. That's the volume imbalance. I'm marking that out. Is it still being respected? Yes. Okay, perfect. We're still in bullish order flow. Same thing here. And marking it out, we're still in bullish order flow. Oh shit! Now we're in. We're coming up to some resistance here. We have a bearish candle here. You have an order block. It's trading through. You have another order block. So you've got some resistance here, right?
Mm-hmm.
But that's how you're tracking order flow to see through. If this gets violated and this gets violated, I'm moving my stop up to protect capital, and then I'm watching. If 3 PDRAs get violated, like it traded through this, it traded through this one, and it traded through into this one, I'm canceling my trade. I'm out. So that's how I'm tracking. That's how I'm following order flow when I get into a trade.
I don't think I would have made it that long if it came back that far, but I know what you're saying.
Yeah, I know. With Apex, no, I can't.
Right, yeah.
But ideally, that's what you're trying to do. Is you're following. You're not just holding on price and then like crossing your fingers, hoping and praying that it trades through it. You're following. You're marking out your PDRAs to find out, because if you're still, that's one thing I need to work on is raising my stop, following the PDRAs, and following higher levels to capitalize on especially on Apex, because like this would have caused a problem. I mean, it would have caused a problem, but it didn't violate this. I was watching this, and it traded down to it and then wicked back up. Traded down to it, wicked back up. So my stop, if I was trailing it, was probably right in this fair value gap right here. I probably gave myself a little room. Don't remember, but that's how you trade that.
Right on.
Yeah, I know. Top Step. I want to do Top Step. They're just so expensive. I can get a ton more accounts on Apex. So, all right, let's go to the next one. All right, so this one was fun. This one was, if you haven't seen this video, it's really good to have immediate rebalance and redistributed rebalance PDRA. Okay, so these are a little bit more in advanced entries, like that breaker block entry versus a fair value gap, but I still wanted to cover it in this week 3. So
let me add something real quick. As you guys are going through these videos and learning this stuff, get to where you can spot one thing at a time. Like, work on it till you can see fair value gaps in your sleep. Go back. You need to really be spending a lot of time in the chart, going back in time, loading up trading view replay, or just even in your mind, just following the candles and saying, okay, that's a fair value gap. That's a fair value gap. And then kind of pay attention to what happens when the price trades back into it. Once you get that down and you're solid, then add a breaker block. That's what I'm doing now. I've got my fair value gaps down. I have no problem with them. So now it's making it easier, because I guess I'm not trying to absorb information from 2 different concepts. Now the breaker blocks are starting to come to me. So I'm going to be working on those until I have the same ability to detect and use those as I do now with the fair value gaps. And then I'll add another one. There's so many you can add. You don't even need them all. But I want to have 3 or 4, especially the main ones, because that's what, like Adam is talking about, that there's a couple of them that if you can add them together, it gives you a lot of extra confluence and better odds on your trade. But don't try to get all of this at one time. If you don't have a fair value gap down yet to where you can just look at a chart and natively just see it, then just hold on, make a note, put some videos to the side where they might have covered it that you can use later. But don't overload yourself, or otherwise you're going to be a jack of all trades and a master of none, basically.
Great advice. Great advice. I know I did the same thing, Mark. That's why I posted it when you're in your chart about going back through and marking up all the order blocks you see.
Yep.
And then when you're good with that, then start with breaker blocks, then do mitigation blocks.
And it will fit together piece by piece slowly as you add. It gets easier to learn it if you approach it that way. But trying to do them all at one time, you're never really absorbing the information on one, and you won't ever get one down.
Yep, 100%.
Good to go.
So yes, this is like I said, this is an advanced entry, but follow the steps here, right? I'm going to zoom in if you want here.
Yeah, the zooming in is very helpful.
All right, so we'll go here. You have buy side taken, right? Why is that higher time frame? Yeah, this is the 5 minute. Don't think it's the 15 minute. I think this is the 15 minute right here. So anyway, buy side's taken clearly. Here's your market structure shift, swing low, created the swing high. So for me, this is the market structure shift. It breaks through it right here with a long wick, okay? The RDRB, Redistributed Rebalance PD Array. ICT came out with it, I don't know, a month or two ago. It's a long wick, which offers sell side and buy side. And then the next candle offers sell side. Okay? So you've got down, up, down. That's why this is a bearish RDRB.
I finally understand it.
You're welcome.
I've been seeing the little documents. I see them in charts, and the RDRB, and I'm like, I don't see shit. But the way you just explained that with the down, up, and then a candle that trades back down through it, I get it.
Yeah, that's it. Down, up, down, and when it trades back into that, take your trade. You can take your trade. Now I've not back tested this thoroughly enough. On this one, I just noticed, oh my gosh, that's an RDRB setup. Take the trade.
Yeah.
Ideally, I spot fair value gaps and breakers now more than anything else. But I'm trying to learn other confluences, right? So this is an RDRB setup, okay?
Yo, guys, sorry to interrupt. What's up, Mark? Can you repeat that one more time, please? The RDRB thing.
Yep. Yeah,
sorry about that, man. Appreciate it.
No problem. So an RDRB is Redistributed Rebalance PD Array. Basically, you have, and there's a lot of people that show it on the left, or I'm sorry, on the right, but ICT said always on the left, or has shown everything on the left. So I don't really know if the right candle, right wick, and one on the other side is right or not. I don't know. So for me, I'm just going off of what I've seen ICT say or show. So what he has given is it has a long wick. So price, on this candle, as this candle is being painted, it started right up here at the top, and then it came down offering sell side to everyone that wanted to go long, offered sell side delivery. Then it came back up offering buy side. Okay. Then it stopped here, right at that thing right there. Okay. Next candle traded down, offering sell side again. So we got sell side, buy side, sell side. Take your trade. It's like a balance. It's basically a balanced price range.
And it just means that the price is beneficially delivered at that level, so you can expect it to leave that level.
Hold. Yeah, it's gonna leave. Yeah, exactly. Okay.
So
on this one, it's always to the left. The wick's always to the left. Okay.
What if you were on the buy side of the curve?
Well, I will see. I don't know. Okay. About height. Let me hold on. Let me zoom in here.
And then one other thing, I tried looking it up on that website, ICT Index.io or whatever it's called. I didn't find anything on it. Yeah. So is there a video, or is it one of the more recent ones?
It's in the 2023. I have a image on there that I can share. It's from, I think, Lumi Traders. Lumi Traders did it. I'll put it up in the group. That I'll show you that. So if you look at this one, this is like one right here, right? So you have, this is the buy side of the curve, right? So you've got buy side, sell side. Started over here, so whatever. That ended down here, so start here. Came up. Oh, sorry, my bad. Went up through it, right? So then from here to here is RDRB right here, right? This price started into it. You could have entered a trade right here. Now you have to have other reasons to enter right there. I'm just trying to show you a buy side one. So I think the wick has to be on the left personally, but
Okay.
like this one right here, I don't know. I don't know if this is one or not, where you have buy side, sell side, buy side. I don't know.
All right. Something we can try to clarify.
Yeah. So on this trade though, took your trade right here. You see you have a fair value gap. It's unfilled, so that's a breakaway gap. You have another breakaway gap here because it doesn't get traded into. But then another PD array that ICT taught this year was the immediate rebalance, which is hey, you have a wick, you have a middle candle, and then you have a wick that meets the other one. It's immediate rebalance. It doesn't necessarily have to line up perfectly. Those are the ones that are easy for me to see, okay? But he's shown some that are wick goes through the other side and call it immediate rebalance. That confuses the shit out of me because I see a lot of wicks trading through.
Yeah, right.
So it's confusing to me. I can see this.
Right.
So but in his latest video, and I just heard a space in May, Twitter space in May, him talking about the immediate rebalance. So I'm guessing it was in May. But him saying that if you have this, you do not take partials. That is an algorithmic signature showing that it is going to move quickly and efficiently away from that area. It is immediately rebalanced and not going to trade back into it. Okay. So on this trade, there was no partials taken. That stopped my partials. I just aggressively moved my stop on Apex, but that's immediate rebalance. I have a chart on there. I'll put that in the group as well, just so you have it.
Okay.
Zoom out.
There's a few of us who might benefit from a description of a PD array.
PD array. Oh my gosh, what is a PD array? How do I describe a PD array?
It's just the
Mark,
term,
you want to go on that?
It's just a term that we refer to for any of these concepts. I'm not sure what the PD even is. I was thinking premium discount, but it didn't sound right.
It is premium discount array.
It's the
what
arrays
PD stands
you would
for.
find in the premium and discount areas of the range. I guess is a sort of a overarching way to define it. But a fair value gap is a PD array. A breaker block is a PD array. Any of these blocks that we're talking about, these immediate rebalances, it's an area where we expect price to do something, and we're going to take advantage of it. All of those are grouped into the term PD arrays.
This is the top half of his PD array matrix. So you have, and if you go on a chart and you find this, you'll find these actually occur in order, more or less.
Oh yeah.
You'll have the old high, and then the long wick is the rejection block. The highest up close candle, bullish candle is a bearish order block.
Right.
Then you have two more candles. You could have a fair value gap. In between those, you could have a liquidity void. And then you have a swing low that creates this new high and breaks through. There's your breaker. If that swing low doesn't break the old high, you have a bearish mitigation block. So it actually is an order of like what you could see on the chart. The higher, obviously, this has the most priority, or not priority. What do I want to say? As you go higher up in the order, is a stronger PD arrays. Okay, like you'll see you will have heard ICT, or we'll hear ICT say he doesn't really trade mitigation blocks as much. He uses them more for confluence, but he'll trade a breaker block all day long. Right. He'll trade a fair value gap. He'll trade order blocks.
And don't think you have to have all of these to start trading and being profitable.
No.
If you get fair value gap, breaker block, and order block, you're set.
You're done.
You're set.
Yeah,
I mean, those three are the ones that when you mix them together and use them, So even though it's tempting to try to, I want to learn it all, you'll hurt yourself in the long run if you just don't focus on just a couple, 3 PD arrays, get those down and trade those for a year, make a bunch of money, quit your job, and then have enough time to say, I think I'd like to learn a mitigation block or something like that. But it's not something you need today, so I wouldn't recommend dividing your attention at this point.
No, I'll get off this then.
It's good. It was good to kind of get the structure and the idea. He asked that question, but I want to make sure they're not going to see that and say, "Oh, I got to go learn that too." It's tempting.
No, you really want to have the old highs and old lows because that's where liquidity is going to be, right? So you already have that one. You definitely want to have the fair value gap, okay, and then you're definitely going to want to have the breaker or mitigation block. Really, the only difference between the two is like this would be this would be right here. This candle right here would be the breaker block because up, down, broke the high, and traded through. Right, it never traded back in, so it's really just an order block. But whatever, but those are the ones you want to have. There's 3 or 4 that you want to have. The rest of them, get them when you get them later. It doesn't really matter.
Yep.
I'm gonna boot this one. All right, this is Friday's NFP one. So, do you want me to go through this one?
Sure. Yeah.
Yeah.
All right. So I'm gonna zoom in here because I can only zoom in so much on this one. All right. So I'm gonna start with NFP. Right. NFP started. It traded lower, took out some liquidity down here, traded up, and right here it took out a weekly high. Okay. So it took out buy side on the weekly candle. Okay. Now, ICT says that weekly candles, the weekly range, if right here as we're taking this out, we're at with this week's current week's candle, we're at the high of the week. Okay, we know that at the vast majority of the time, there's usually at the end of the day, Friday, there's usually a 20 to 30% retracement. Okay, he talks about this in 2023 at some point. I don't remember where. So we know that at this point we're looking for some kind of retracement to end the week. So we're looking for shorts. Okay, when this took this out, everyone is looking for shorts. All the price did for this whole hour here was just build liquidity up here to take it one more time to go low and build all this failed swings down here for easy liquidity to get taken. They're just consolidating. Okay, price trades up. We're not even at the silver bullet range yet. Price just traded up, took out this liquidity, failed to do it again, and then shot down. Came out and took out the liquidity of NFP, the newest candle, right? And here everyone's like, "Whoa, well, I missed the move. I was not. I was not fooled by that. I know that the 20 to 30% range, we weren't even close to it at this point. Well, we actually were decent. We weren't there yet. We weren't where I wanted price to see go. Okay." So pulled the fib from here, high to low, and up here is, let me see, there you go. Optimal trade entry is right in here, okay?
Just for clarification, the percentage on the optimal trade entry is
0.62 to 0.79. Obviously, the middle is 0.705.
Right.
Is what ICT wants is optimal trade entry, but you can get in from the 0.62 to the 0.79.
Got it.
On the thing. So when it was retracing here, coming to the AM silver bullet hour, I'm waiting for up here. I have this volume on my chart waiting for price to come up into equilibrium, above equilibrium, into the optimal trade entry and get in the trade. First, a candle at 10 o'clock shoots down, and I was like, son of a gun, I missed the trade. And then the very next candle, I was like, really? Serious? I mean, I was mad. I wanted to take this trade. And then next candle got me closer up here, and I was like, okay, maybe it's still going to trace. And then, same fake out here again. I have the same emotions as everybody else does.
That's
it's like
all that's all design.
I get mad.
That's all by design.
It's all designed to fake you out, and you're like, this sucks. Because if you took your trade here, you're getting taken out, right?
Yeah.
My rule is I wanted an optimal trade entry trade. Price came up, and what I did here, while you have this red and green, is because this is like a 5.5 handle fair value gap. So all I did was pull the fib, a different setting I have for, premium and discount. So premium is up here, discounts down is the lower half. This 50% range is right here. So, and it's in optimal trade entry. So you've got optimal trade entry in a fair value gap in the premium discount equilibrium of the fair value gap.
Right, and that's what when
So
you
right
normally
here is where I
see
took a trade.
confluences are just stacking your probabilities.
Yep. So there's actually two trade setups here. I show you this one. I take this one. And then you have a market structure shift here, right? Why is it a market structure shift? It should be a short-term low. You have it labeled as a market structure shift. You have displacement here. So this is your 2022 model entry here. Forget the OTE one. This is your 2022 model.
Right.
You have fair value gap here with displacement right here. There's your entry. Your stop goes above the candle here. I think it's 5, and you aimed for this low. I think it was 15 handles on this one. That's your trade set. That's why it's shown on here. But this is the entry where I wanted, why I took the trade.
Sweet.
Oh, what?
I said sweet. Yeah, that was a good one.
Yeah. So there's two trade setups here. I did the video as I think it's like a week away. I just recorded it this morning, but this is the two entries on the Silver Bullet Hour. But you can always find this 2022 mentorship model. Like for me, I'm always looking for it. I'm always looking for it. So did this take liquidity? No. But here's the thing. Here's why this gets tricky. Okay. ICT says price trades for goes up or down for two reasons. One, to take out an old low or old high. So takes out an old low here, right? And then trades into an inefficiency.
Right.
This is an inefficiency. So this is where it was going.
Yeah.
There's liquidity up here. It's rebalancing it so it can go lower.
And if you look at,
So
go ahead.
for me, that was step one. Go ahead, Mark.
If you look to the left, there may have been a higher time frame PD array in play also because of the way the price is bouncing out of that area. You might have had something else there as well that made it so where you didn't have to look for that new high to be taken. Like you said, there's an inefficiency somewhere there that it's trading up into.
This could be on the 2 minute. Could have been a smaller fair value gap. Could have been 5 minute.
You know, like this one has like a failure swing where you had your high and then it failed to make the new high. That's when it drops from there. That's a good place to find that fair value gap that you've got marked out right there. You know what I'm saying? You made a high and then it made a failed swing or didn't break it, and then you got your fair value gap. When I see those and then it gets traded back up into, I mean, I guess that's almost the essence of the 2022, but it's just a pattern that I recognize that when I see it, it's definitely one I want to get in on.
When I took this trade, my max is 5 handles. So ideally, I'd want it to be above this high. On OTE, what I'm answering Yama's question here. If when I entered here, I only did 5 handles, which took me like right in here somewhere. But on OTE, what he wants you to do is you want your stop above the high. Well, that's too much risk for me. So I only did 5 handles. That's the most I'm willing to lose in a trade.
Yep, same
So,
here.
but yes, ideally you'd want to be above this high.
And if I'm 2 ticks away, I'll give it the 2 ticks. I mean, I'm not gonna,
True.
lose the whole trade for that. But you don't want to go 7, 8, 9 points.
No, gosh, no.
When you mark out these areas, how far do you go in the higher time frame space? Like, do you just go for the 5 and 15? That's it, or do you take the weekly, monthly, daily stuff as well?
Me personally, I look at all of it. The weekly, the month, just so I'm trying to learn to visually see project where the weekly goes and have a higher time frame target. However, so I'll go weekly, then I'll go to the daily, then I'll definitely go to the 1 hour or the 4 hour, the 1 hour, 15 minute, 5 minute, just kind of see how everything's lining up to that higher time frame. They should all be respecting the higher time frame PD arrays, right? So I mark them on my chart, but when I'm live trading, I have at least five charts going up. So I have the 1 hour, 4 hour, 15 minute, 5 minute, and 1 minute on my chart. So they're all marked on different charts. So I'm watching to see how price is being respected on the higher time frames.
Hey, I'm gonna share my screen real quick, just to show
Let me
an
get out.
example of that.
Stop streaming. I stopped streaming so you can. Do it.
Let's see, which screen am I on? I'm on that big screen over there. Okay, so you guys have seen me do this, I'm sure. Here you go. Can you see my screen?
Mm-hmm.
Okay, so here I've got the 15-minute, here I've got the 30-minute, here I've got the 60-minute, here I've got the 4-hour, and here I've got the daily. So the PD arrays are getting drawn out automatically for me. Otherwise, I probably wouldn't be able to do it very well. But since they're already there, as price is moving, I'm looking and seeing, okay, I've got a 15-minute fair value gap that I'm coming out of. No resistance on the 60-minute, nothing on the 4-hour, nothing on the daily. You know what I'm saying? Depending on, you know, what all is going on, I can see at a glance all the PD arrays that we might be looking for. And when I get 2 or 3 of them lined up on several different time frames, for me, that strengthens the whatever idea I had, or maybe it tells me that maybe I don't have a good idea if I'm going into a bunch of resistance. So whether you got 5 monitors or if you got 132-inch, you can. I've got this on a tab. I mean, I do all my trading pretty much on one monitor. Here's my 5-minute, my 1-minute. I can switch. Here's my 5 time frames. I can switch. Here's my week and month. So everything's right at the tip of my fingers to just flip from a tab to a tab to a tab on one monitor, and then I'll have my trade of 8 on a different monitor where I'm actually entering and moving my stops and all that. So that's just, you know, the way I do it. But like I said, that's a good way to use that higher time frame stuff. Okay. Let me close. How do I close it? That's stupid.
You can keep sharing if you want. I don't have any
I
other
got it. Oh.
charts.
I don't think of anything else offhand to cover. That's a lot of
Mark,
Say again?
hello?
Yeah, go ahead.
Yeah, yesterday we were discussing that you would show the back testing and journaling part, if you remember.
Oh, yeah, shoot. Yeah, I can show you real quick a software that I use, but Adam, don't you have something that you were putting out or had that was
Yeah, I
tracking trades?
have to find it here. Hold on. Journal.
If not, we can make that a point for the next one, but and I don't even have really much data populated in my program to even show you because I haven't been using it lately, but let me look.
I have a. That's not it. I'm trying to find the thing I had on YouTube.
Okay, I've got a little something here. Hold on, I'll share my screen again. Or try to. I don't know why this is so difficult for me. Share screen, that one. Share.
There we go. You see it?
Okay. You're still seeing my charts though, right?
Yep.
No, I can't see anything actually.
What are you seeing from my screen?
Yeah, now I can see.
Okay.
Now I can see your screens. Yeah.
All right. So let me pull this one over here. So this is what I use for tracking trades. You can open each one and you can put an image of your trade in here. You can put your information down here. You can add a screenshot. You can put your notes in. So there's a ton of information you can put in here, and it's sort of handy, but like I said, I haven't been using this as much as I've just been doing my own, whatever you want to call it, spreadsheet. But it will give you ways to sort. You can find out which time of day you're having the best trades, which time of the day you're not doing as well. It's called Trader Sync. I don't remember. It's not that much, $30 or $40 a month maybe. It might be more if we bought it for a year. There's different kind of programs like this. And like over here, I had, you can create your own list of mistakes, setups, things like that. And then for each trade, you would go in and put it and tell it which setup you had, which mistakes you had. And then you can sort the data by how many of my trades were affected by this mistake, how many of these trades of this setup were profitable. There's a ton of stuff you can do with it. So if you're looking for a way to organize it, you don't want to build your own spreadsheet, then something like this would take you a long way. You definitely need to have something where you can visualize and get in here and look at, find ways to use the information from your trades to get better. So whether you're using something like this or a spreadsheet template, I definitely recommend finding something like that.
To answer the a trade about the DR, we can do that after this is done.
Okay. Anything else?
Any other questions if we're gonna on the 2022 part?
No, I'm good.
One person's time. ICT is always quote retiring. He says he's going to be done at the end of the year, but he said that last year. So he says he's going to be done in November, but he's got an ego the size of like Texas.
Yeah.
So I mean, I love the guy's trading methods and everything, but he's got a huge ego. And so I personally think he's gonna, and he's even said in a couple spaces that I'll still be around, just not as much, which is now starting to change his tune. By November, he'll be like, "Oh, I'll be back. I'll still trade," because he's got a huge ego. So yeah, so he may not be as trading as much or doing as many lives or anything like that, but he'll still be around.
Yeah. And we've got all of his stuff offloaded onto drives and stuff. So even if he had a hissy fit and took his toys and went home, we've still got. I think Shannon like downloaded the entire ICT library, and I think I have it as well somewhere. So we don't really have to worry about that. Yeah,
you don't want to know how many.
I remember that Ty. I remember him saying that that his wife would let him pop
Yeah.
every once in a while.
You don't want to know how many gigs of ICT videos I have. It's ridiculous.
Yeah, so we're covered.
Yeah. So I think I have every single video he's ever made. Pretty sure
Right.
I have the most. But
Wow.
you don't need it. You don't need it. That's the problem. You don't need it.
Yeah, you
So-
don't really. Find
It just
a little bit
confusing
of
you
stuff
more, and it just helps.
Yeah, I saw that too, Jay Frex. He was had a motorcycle wreck without a helmet, so glad he's okay.
Yeah. Yeah, I haven't actually looked at the chart yet. I won't look at the charts again until probably Monday, even though it's a holiday. I'll probably look Monday to prep for my week for the month. So I don't do that until right before trading, so I'm in the zone of that. So I haven't actually looked at it.
Monday there is no market, right?
Not in US. I mean, there's still Forex stuff is going on, but US is closed.
There'll still be a London session,
Oh.
and Asia will open up that night or something. But and sometimes they even run it until noon and then cut it off. So I don't know how that works, but
Yeah.
it's not great
Yeah.
time. The volume's going to be low, and it's choppy. You might not even get DR confirmations, things like that. It's just take the day off, enjoy your family and all that.
I'd say yes. Yeah, I would do that. I'd mark up your charts and put them in the charts feedback.
Yeah, do that. That's a good idea. That's kind of what it's for, is so we can see what you're seeing, and maybe point out something that you're not seeing, and just kind of give you some insight.
And look, and there's the thing. Don't be afraid. You can even put them in the 2022 if you want. If you don't want to put them in there, it's fine. But if anyone is negative or are not very nice in any of our discussions, they just get booted from the channel, or the Discord. So
Yeah.
don't worry about that. Everyone starts somewhere. We're just here for everyone to learn and grow. So
Right on.
don't worry about it. Just so I'll address the DR Kraken model. This week's review is coming out tomorrow morning. I do go over, I think it's Thursday or Wednesday, when it was a false day, and how I stayed out of that, which was awesome. And that's why I added that rule to that of clarifying a rule.
Okay, good.
So that's why the rules are updated in that. So, but anyway,
I'll see it I'll go find it.
well, if you want to stay on here, we can cut the 2022 mentorship part off. We wanted to go over the chart if you wanted to do that.
Yeah, I'm in.
Yep.
So do you want to stop the recording for the 22?
Oh yeah, yeah.
Mark?
Because this is all secret sauce stuff. We don't want this getting out.
Yeah. Well, this is all just